Microsoft, MSFT, is trending following its latest earnings report, which delivered strong results across both revenue and profit, comfortably surpassing analyst expectations. Despite the solid performance, the stock saw a post earnings pullback, a move the community largely attributes to higher than anticipated capital expenditures tied to AI infrastructure and signs of moderation in cloud growth, particularly within Azure. While Microsoft's cloud business continues to grow at a healthy pace, some investors were disappointed by the deceleration relative to prior quarters, especially as comparisons are made against peers that are currently being rewarded more aggressively for AI driven narratives. At the same time, management's commentary around elevated AI spending, including data centers, specialized hardware, and model training, reinforced concerns that near term margins could remain under pressure. This has fueled an active debate around the timeline for returns on Microsoft's massive AI investments. Bulls argue that Microsoft is deliberately front loading capital to secure long term dominance in enterprise AI, embedding Copilot and AI services across Azure, Microsoft 365, and developer tools. From this perspective, the stock's pullback is viewed as a buy the dip opportunity, especially given Microsoft's scale, customer lock in, and proven ability to monetize platform shifts over time. Skeptics, however, are more cautious. They question whether AI monetization will materialize quickly enough to justify the current pace of spending, particularly as competition intensifies and customers remain cost conscious. Some also point out that the market reaction contrasts with other major tech companies, where investors have been more forgiving of rising capex, raising concerns that Microsoft may face higher expectations and less margin for execution missteps. Overall, Microsoft's trendiness reflects a familiar big tech dilemma: exceptional fundamentals paired with heightened scrutiny. The community remains split between confidence in Microsoft's long term AI strategy and uncertainty over when those investments will meaningfully translate into accelerating growth and stock performance.
So MSFT is down 5.43%. This is the pre-market session of Thursday, the 29th of January 2026. Okay, let's see what we have on its daily chart. Yeah, the algos got it. Seemed to be, yeah, it was as of yesterday before the market closed. The extrapolation was saying that it was going to weaken somewhat today, and actually saying that it might continue to remain. It's actually contracting. It had an expansion. It was expanding from the 22nd of January. So yeah, it's saying that from today it will begin to contract it up till the 2nd of March. Then after that, it might resume the uptrend, and the 40-day moving average is going to serve as a primary demand supply line once it drops below it. Yeah, once it drops below it, and any attempt to surpass it might lead to an increase in supply. Yeah. Well, as things stand right now, the projections are currently saying 499.49, 510.42, 517.17. There's a chance that after all of this is digested, after the shock of increased capex spending is digested, the stock might it might resume the uptrend. Yeah, they might get back into the stock and start buying it. So and maybe that's why the algos are saying that maybe later on, from the 2nd of March, might there's a, okay, well that's a long time to come, but before that time, there's a chance that it might get a rebound. So projections are currently saying, what is on this market grid? We have 494 between 494 and 466. It's currently trading at it has it dropped. It's down to 5455. Let's see where it is. It's has it dropped? Yeah, it has dropped out of this market grid. Let's have a look at the five. But before we do that, any resistances? Yeah, 455. Let's see whether there's any resistance. yeah, there are some resistance, but we want when we see a reiteration, when we see a convergence of prices, then we can say that maybe some there are some resistance. We can't see anything. 466, not really. Four, okay, well, between 462 and 469 range, there is a resistance there. 462 is its 10-day moving average, and then 466 is a SXT, and then 469 is its S3. So let's see what we have on its 4-hour chart, which has reflected what's going on right now. Okay, here it's also trading outside of the market grid, so the rebound is expected. But before that, lower prices are expected to continue to print up till Monday, the 2nd of February. Then we might get a consolidation. Okay, and there's no guarantee that any of these will pan out exactly as I just indicated. So yes, there's a decent amount of, yeah, you can see here, yeah, 466 retreated again. So it has it has it has a potential resistance at those sort of levels. Let's see the 1 hour chart. On the 1 hour chart as well, lower prices up till tomorrow, the 30th of January. So it's currently, where is it right now? It's at 452 right now. So it's advancing towards 455. And yeah, you can see here 461, it's, yeah, we've seen this 46 prices reiterated so many times. Yeah. So there's a resistance that has from $460 to up to 469. Yeah, strong resistance there. If it breaches it, then we are looking at the prospect of advancing towards 473. You know, and it's looking up. It's the trajectory is to the upside. Let's see what we have. What the intraday high is saying, if any. 485. It printed on the 27th. That's 2 days ago. So I think that was printed as it was advancing. That was printed when it was when it was yeah, before it was expanding earlier on. Yeah, yeah. So that's what we're looking at right now, and let's see how all of this will go. And I'll definitely continue to update you. Thank you very much for watching this video.